Do you know the worst mistake that 90% of traders make on their very first day? They open a $100 account and convince themselves they'll turn it into $1 million within a few months. Sounds exciting, right? But in reality, it's a one-way ticket to blowing up your account. The paradox is this: the faster you try to get rich, the faster you go broke. Meanwhile, the traders who actually become wealthy choose the slower, boring, but sustainable path. Here's a hard-to-believe truth. You don't need a 90% win rate to succeed. In fact, you can lose half your trades and still become wealthy if you have discipline and the right mindset. Shocking? Maybe. But it's the truth almost no one dares to tell you. The most important question is not, how do I win fast? But rather, how do I survive long enough for the power of compounding to take over? That is the hidden secret behind traders who last decades in the market while others disappear in months. In the next sections, I'll show you exactly how to turn $100 into a money-making machine, not through gimmicks but through a mindset system most people completely ignore. Part 1: The $100 Illusion. When most people open their first trading account with a measly $100, something strange happens in their brain. Logic takes a vacation, and fantasy moves in with a suitcase. Suddenly, that $100 looks less like pocket change and more like a golden lottery ticket. They start crunching imaginary numbers. If I just double this every week, that's $200, then $400, then $800, then $1,600. Within a few minutes, they've mentally retired on a beach somewhere, sipping cocktails and laughing at their old boss. And yet, ironically, this exact fantasy is why most traders never make it past their first few months. Because here's the cruel truth. Trading is not a get-rich-quick machine. It's a get-disciplined-slowly machine. But who wants to hear that? Nobody. We're addicted to instant dopamine hits, the flashy green candles, the adrenaline rush of risking it all on one trade. That, my friend, is the casino mindset, not the trading mindset, the seduction of speed. Let's pause and satirize this for a moment. Imagine a rookie trader named Kevin. Kevin starts with $100 and declares, "I'll flip this into $1,000 in a month, then $10,000 by summer. By Christmas? Lamborghini." Kevin isn't trading the market, he's trading his delusions. He's not analyzing charts, he's auditioning for a financial comedy show. And the audience? Margin calls and blown accounts. Turning $100 into $1 million isn't about speed. It's about endurance. Think marathon, not sprint. Think decades, not days. The professional trader is boring. They repeat the same rituals day after day, logging trades, risking 1% or less, analyzing patiently. But boring builds wealth. Introducing the compounding mindset. The key to escaping Kevin's fate is what I call the compounding mindset. This is the belief that slow, steady, strategic growth destroys reckless gambling every single time. It's not sexy. It's not going to get you viral TikTok views. But it's the only mindset that actually wins. Compounding demands 3 unglamorous traits. Patience, the ability to wait, even when you're itching to click buy. Discipline, the ability to follow rules, even when greed whispers, just one more trade. Vision, the ability to think in years and decades, not in weekend jackpots. Here's the paradox. The faster you chase riches, the slower you'll reach them. But the slower you build, the faster you'll eventually arrive. That's the compounding secret. Why most traders refuse this truth. Now let's get brutally honest. Why do most traders resist compounding? Because compounding requires humility. And humility doesn't trend on YouTube. Nobody wants to post. Day 356. Still growing my $100 account at 2% per week. Still not rich, still grinding. But that's the path to actual wealth. The market rewards those who can stay consistent when others burn out. The problem is, we live in a TikTok society with a Las Vegas mentality. Everyone wants fireworks. Nobody wants the candlelight. But in trading, the candlelight, the slow, steady burn, is what creates the real fire. Satire. The Double Account Club. Let me paint a scene. Every week, a group of rookies meets in the fictional Double Account Club. One guy proudly says, "I doubled my account this week." The next says, "I doubled mine too." 3 times. Then silence falls when the last guy mutters, "I blew mine up." Again. That's not a club of traders. That's a support group for gamblers. The professional trader doesn't brag about doubling. They brag about surviving, about risk management, about consistency. If you want longevity, forget doubling. Start thinking about not having your account. Survive first, thrive later. A coach's challenge. Here's my motivational challenge for you. Stop asking, how fast can I grow $100 into $1 million? Start asking, how long can I preserve $100 without blowing it up? That shift alone transforms you from gambler to strategist. You'll stop worshiping indicators like they're magic spells. You'll stop revenge trading because the market owes me. You'll stop dreaming about quitting your job by Friday. Instead, you'll start building the kind of mindset that million-dollar traders actually use. Calm, calculated, boring. Boring today, wealthy tomorrow. That's the compounding mindset. Part 2, rewiring the trader's brain. The compounding mindset isn't just a trading method, it's a neurological reprogramming. Most new traders come in with brains wired for instant gratification. They scroll social media, binge Netflix, expect Amazon Prime deliveries in 24 hours. So when they sit in front of a chart, their brain screams, "Why wait? Buy now. Get profit now." Don't think, just click. And that's the beginning of the end. The dopamine trap. Every trade you place is a dopamine gamble. Win, and your brain rewards you with a chemical high. Lose, and your brain screams for revenge, for a way to get even. This is why so many rookies spiral into reckless overtrading. Here's the irony. The brain loves drama, but the market punishes drama. The brain wants excitement. The market rewards boredom. That's why the best traders in the world look almost robotic. They're calm when others panic. They're patient when others rush. They've rewired their dopamine addiction away from fast money and toward long-term consistency. The gambler inside you. Think about this. Inside every trader lives 2 characters. The gambler, impulsive, emotional, chasing highs. The strategist, disciplined, methodical, unemotional. Which one wins determines your account balance. The gambler loves the idea of doubling accounts. He thrives on reckless leverage, chasing the hottest tip, following 5 contradictory YouTube gurus in 1 week. He thinks a red candle is a personal insult. He's the one screaming, "I'll make it back in the next trade." The strategist, on the other hand, knows the truth. The market doesn't care about your feelings. A red candle isn't an insult. It's just data. The strategist waits, plans, risks small, and survives long enough for compounding to do its work. Most beginners let the gambler drive the car. Professionals lock the gambler in the trunk. Satirical snapshot. Revenge Trading Anonymous. Imagine a self-help group called Revenge Trading Anonymous. The members sit in a circle, and one by one they confess. "Hi, I'm Mark. I lost $500 yesterday and doubled my lot size to make it back. Now I'm down $5,000. Hi, I'm Sarah. I swore I'd only take 1 trade a day. Then I took 8 because I couldn't stop." The strategist never attends these meetings. Why? Because the strategist never lets emotions dictate trades. How to rewire your trading brain. So how do you kill the gambler and nurture the strategist? You don't need a brain transplant, you need new habits. Here are the core rewiring techniques. Shrink the time horizon. Instead of dreaming about $1 million, focus on executing the next trade flawlessly. Small wins create big patterns. Detach from the money. Professionals risk percentages, not dollars. Losing 1% is tolerable. Losing 50% is a death sentence. Reward the process, not the outcome. Celebrate sticking to your stop loss, even if the trade was red. That's discipline. That's compounding fuel. Practice no trade days. Some days, the best trade is no trade. Boring, yes, but boring preserves capital. Journal everything. Journaling rewires your brain by forcing reflection. It turns random actions into patterns, and patterns into discipline. The discipline paradox. Here's a paradox that will sting. The market is not designed to make you rich. It's designed to expose your weaknesses. Every bad habit you have, impatience, greed, arrogance, the market magnifies it. But here's the twist. Once you conquer those weaknesses, the same market becomes your ally. The battlefield becomes your training ground. And every disciplined action you repeat slowly transforms you into someone the old gambler wouldn't even recognize. Motivational coach moment. Let me give you a quote to tattoo on your trading desk. Discipline weighs ounces. Regret weighs tons. Every impulsive click of the buy button feels light in the moment. But when your account crashes, the weight of regret will crush you. On the flip side, every ounce of discipline, waiting for your setup, respecting your stop, builds into the compounding snowball that grows your wealth. Which weight do you prefer to carry? The ounce today or the ton tomorrow? From casino to business. If you take one lesson from part 2, let it be this. Stop treating trading like a casino and start treating it like a business. Casino player shows up for thrills. A business owner shows up for structure, systems, and long-term profit. That's the rewiring you need. We've identified the gambler, introduced the strategist, and laid down the rewiring process. But knowledge alone isn't enough. The real test is consistency, the ability to show up every single day and execute. In part 3, we'll dive into the rituals, habits, and daily structures that separate losers from long-term winners. Part 3, the rituals of consistency. If part 2 was about rewiring your brain, part 3 is about training your muscles. Because trading is not just mental, it's physical. It's what you do every single day. The painful truth? Most beginners have zero routine. They wake up late, grab their phone, scroll through Instagram, and then suddenly see a green candle shooting up. Panic sets in. I'm missing it. Get in now. And just like that, their day is ruined before they've had breakfast. Professionals, on the other hand, live by ritual. Trading isn't a hobby. It's not, I'll squeeze in a trade between Netflix episodes. It's a structured, repeatable practice. And structure creates consistency, while consistency creates compounding. The daily checklist of a real trader. Let's contrast 2 mornings. Rookie morning routine, aka chaos. Snooze alarm 3 times. Wake up late. Check Twitter for hot tips. Open chart with zero plan. Enter trade immediately because FOMO. Blow account by noon. Professional morning routine, aka discipline. Wake up at a set time, no snoozing. Review yesterday's trades, journal observations. Scan watch list, identify 2 to 3 high-quality setups. Mark entries, stops, and targets in advance. Step away from charts until the market actually sets up. Execute only if plan aligns. See the difference? The rookie chases. The professional prepares. Satire, the worship of indicators. Here's where I get satirical. Many new traders are like pilgrims at the temple of indicators. They bow to the MACD, burn candles for the RSI, and whisper prayers to the Bollinger Bands. They think, surely, this new indicator will fix my losing streak. Spoiler alert. No, it won't. Indicators aren't gods. They're tools. And if you hand a shiny new tool to an undisciplined trader, guess what? They'll just hurt themselves faster. Professionals don't worship tools. They worship process. They know an indicator is only as good as the strategy behind it. So instead of stacking 12 indicators on your chart until it looks like a rainbow vomited all over it, focus on clean price action, clear rules, and disciplined execution. The power of ritual. Consistency isn't about willpower. It's about ritual. When you repeat the same structured actions every day, discipline becomes automatic. Here are 3 rituals every trader should adopt. Pre-market ritual, journal yesterday. Set today's goals. Mark key levels. Trading ritual, limit yourself to 1 to 3 setups. No chasing, no random entries. Post-market ritual, review trades honestly. Log mistakes. Celebrate discipline. Notice something? Winning traders spend more time planning and reviewing than actually clicking buy or sell. The trade itself is just execution. The real edge is preparation. Discipline as a lifestyle. Let me hit you with another truth bomb. Trading discipline is just an extension of life discipline. If your diet, sleep, and daily habits are chaos, your trading will be chaos too. The best traders treat themselves like athletes. They manage energy, reduce stress, keep their mind sharp. Why? Because a fatigued brain makes emotional decisions. And emotional decisions empty accounts. So yes, getting enough sleep and eating real food is a trading strategy. Laugh all you want, but your brain chemistry dictates your trading performance. No amount of RSI divergence can save you if you're trading half asleep on 5 cups of coffee. Motivational Coach Challenge. Here's your challenge. Design your trading day like a pro athlete designs training. That means fixed start and end times, clear warm-up, chart review, strict playbook, entry rules, honest cool-down, journaling, and most importantly, stop trying to be in the market 24/7. You don't need to trade every candle. You need to trade the right candle. Remember, money doesn't come from clicking buttons. Money comes from waiting for the right moment, then acting with precision. Quote to remember. Here's a line to put on your wall. Amateurs want action. Professionals want consistency. The amateur lives for the thrill. The professional lives for the routine. The amateur brags about big wins. The professional brags about still being alive after 10 years. Which one do you want to be? We've built the rituals of consistency. But here's the next level. Handling setbacks. Because even the most disciplined trader will lose. The difference between blowing up and compounding comes down to one word: resilience. In Part 4, we'll dive into the emotional battlefield of losses and how professionals turn pain into progress. Part 4, Resilience. Turning losses into lessons. Here's the truth no one on flashy YouTube thumbnails wants to admit. You will lose. Not once, not twice, but often. Losses are not a bug in trading. They are the feature. Every professional knows it. Every rookie denies it. New traders fantasize about win rates of 90%, as if trading is a video game cheat code. They think if they just find the right indicator, the right guru, or the right holy grail strategy, they'll never lose again. This fantasy is so strong it blinds them to reality. Reality is cruel but freeing. You don't need to win every time to get rich. You need to survive losses without losing your mind. The emotional punch of a loss. Let's be honest. A trading loss feels personal. Feels like the market singled you out, laughed in your face, and stole your lunch money. And your instinct to fight back. That instinct is deadly. Fighting the market is like boxing a brick wall. You break your hand, not the wall. Here's where resilience comes in. The ability to accept pain without letting it turn into self-destruction. Satire. The Revenge Trade Olympics. Imagine the market hosting the Revenge Trade Olympics. Competitors from around the world blow their accounts with style. One trader doubles their lot size after every loss, aiming for the gold medal in fastest margin call. Another ignores all stop losses, diving for glory in deepest equity drawdown. And the rookie favorite? He takes 12 trades in 1 hour to prove he's unstoppable. The crowd cheers, and every competitor goes home broke. Resilience is about refusing to compete in these Olympics. Professionals don't chase. They retreat, recover, and return stronger. How professionals handle losses. So what does resilience look like in practice? Predefined risk. Before entering a trade, the professional already knows how much they're willing to lose. That means the loss never feels like a surprise. Journal reflection. Instead of sulking, they ask, what did this loss teach me? Was it strategy or execution? Break rituals. After a big loss, they step away. Walk, gym, family time, anything but trading. They don't let emotions bleed into their next trade. Mindset shift. They see losses not as failures but as tuition. The market charges rent, and losses are the fee for staying in the game. The bounce back factor. Here's the difference. Amateurs collapse after a loss. They spiral into overtrading, revenge trading, or quitting altogether. Professionals bounce back. They absorb the punch, learn, and continue executing the plan. Think of resilience as muscle. The more you face controlled losses, the stronger your bounce-back ability becomes. One day, a $100 loss feels like the end of the world. Years later, a $10,000 loss feels like another Tuesday at the office. Motivational coach moment. Let me light a fire under you here. It's not the loss that destroys you. It's the story you tell yourself about the loss. If you say, I lost because I'm stupid, unlucky, cursed, then you've already lost twice. But if you say, I lost because I followed my plan and that's part of the game, then you've already won. Even if the trade was red. That's resilience. That's compounding your psychology, not just your money. The professional's secret weapon, detachment. Here's the paradox. The more emotionally attached you are to each trade, the worse you perform. The more detached you are, the more rational you become. A pro sees each trade as just one of thousands they'll take in their career. One win won't make them rich. One loss won't make them broke. They're not in love with any single outcome. They're married to the process. Detachment doesn't mean apathy. It means clarity. It means loving the craft, not the thrill. Satire snapshot. The emotional trader's diary. Let's peek into the diary of an emotional trader. Monday. I'm a genius. 3 wins in a row. Early retirement, here I come. Tuesday. The market hates me. I should quit forever. Wednesday. Wait. I just found a new strategy on YouTube. This is the one. Thursday. Crashed again. Maybe I'm cursed. Friday. Well, I'll try crypto instead. That's not a diary. That's a tragedy in 5 acts. The professional's diary, meanwhile, reads, followed rules, took 2 trades, net P/L-1R. No mistakes, good execution. One is drama, the other is discipline. Guess who survives? Motivational quote. Here's one to burn into your mind. Your resilience, not your win rate, determines your future wealth. Read it again, slowly. So far, we've built the foundation. Patience, rewiring, consistency, and resilience. But here comes the pinnacle, long-term vision. Because compounding isn't just about days or months. It's about decades. In Part 5, we'll explore how professionals build empires brick by brick, while amateurs keep chasing jackpots. Part 5, the long game, compounding wealth, compounding character. We've exposed the fantasies, rewired the brain, built rituals, and hardened resilience. Now it's time to zoom out, the big picture most rookies never see. Because here's the irony. The only way to grow $100 into $1 million is to stop thinking about the million. Stop staring at the finish line and start walking steadily, step by step. The math nobody wants to hear. Let's do some boring but liberating math. If you grow your account by just 2% a week, that's about 100% in a year. Double in a year sounds slow, right? But here's the kicker. After 10 years, that same discipline doesn't just double your account 10 times. It compounds into exponential growth. That's the real $1 million path. Yet most traders quit long before compounding even has a chance to work. They want fireworks, not candlelight. They chase 200% months, then disappear in 3. Professionals? They survive. And survival is everything. The empire builder mindset. Here's the shift, you're not building trades. You're building an empire. One brick at a time. Every disciplined entry equals a brick. Every respected stop-loss equals another brick. Every journaled lesson equals stronger cement. It's not glamorous. It's not Instagram-worthy. But 10 years of laying bricks quietly builds a fortress. And that fortress pays you for life. Satire. The get-rich-quick Hall of Fame. Imagine a museum dedicated to failed shortcuts. A statue of the guy who turned $100 into $10,000 in a week, then lost it all in 2 days. A glass case holding the sacred USB drive of someone who bought a secret trading bot for $999 and watched it crash their account. A hall of screens showing TikTok gurus saying, just quit your job, trade like me, and you'll be rich by next Friday. The tour guide whispers, ladies and gentlemen, these are the relics of impatience. Please observe in silence and pity. professionals never make it into this hall of fame. Why? Because they're too busy building wealth slowly to chase circus tricks. The double compounding money and mindset. Here's the secret nobody talks about. Compounding doesn't just apply to money. It applies to mindset. The first time you cut a loss at -1 it feels painful. The 10th time, it feels natural. The 100th time, it feels automatic. Discipline itself compounds. Habits compound. Confidence compounds. That's why after a decade, a professional trader isn't just richer. They're calmer, sharper, wiser. The market didn't just grow their account. It grew their character. Motivational coach call out. So let me hit you with this. A millionaire mindset is built long before the millionaire account. If you don't train your patience with $100, you'll never survive $100,000. If you can't respect a stop loss with a micro lot, you won't respect it with a full contract. The market tests you small before it rewards you big. Fail the small test and you'll never graduate. Pass it and compounding opens the floodgates. The visionary's timeline. Here's how the pros think. 1 year, survive, learn discipline, build journal. 3 years, achieve consistency. Small profits, steady growth. 5 years, grow account meaningfully. Trading is a business, not a hobby. 10 years, compounding takes over. Life-changing wealth begins. Meanwhile, amateurs are stuck in a cycle of blow account, restart, blow account, restart. 10 years later, they're still asking on Reddit, how do I stop overtrading? Final satirical scene. 2 traders meet in 2035. Picture this. The year is 2035. 2 traders meet at a cafe. Trader A says, man, I've tried 37 strategies, 12 brokers, for signal services, and 6 trading bots. Still broke. But I swear the next one will work. Trader B smiles quietly. I've been trading the same simple system for 10 years. Risked 1% per trade. Boring as hell. But now, I'm free. One chased fireworks. The other lit a candle and let it burn for a decade. Who do you want to be? Closing motivation. If you take nothing else from this entire journey, remember this. Trading is not about getting rich fast. It's about staying alive long enough for compounding to do its magic. You don't need to be brilliant. You don't need to predict the future. You just need to be disciplined enough to last. Because in the end, trading is not a sprint. It's not even a marathon. It's a lifetime practice. And those who embrace the long game win the game. Final call. So let me ask you what I asked at the beginning. What's the biggest change you've had to make in your trading mindset, and how did it impact your results? Drop your answer in the comments. I read every single one. And remember, your story might just inspire the next trader to stop gambling and start compounding.